As the topic suggests, we have gathered here today to talk about the revised ODI and OPI guidelines that the government of India released and their impact on investing overseas, transfer of money overseas, and what it really means for individuals and corporate houses who are looking to invest overseas, buy real estate overseas, and and are interested in the citizenship by investment programs. What does this mean? Because all of these involve an outflow of money. So what we've got here in this panel, we're going to take you through various provisions impacting overseas investments by residents, by corporate houses, overseas structures, and other important aspects such as round tripping, and like I said, how sending money overseas will change or has changed. And to answer all your very difficult questions, and thank you very much for listening to our banter just before we started as well. Some of you told me that you could listen and you were having a lot of fun, but this is going to be interesting and fun as well. So I've got three very esteemed panelists with us today. And in addition to them, a large number of members, very senior members and founders at Sotheby's India as well, to answer some of your questions. So without further ado, let me introduce the panel and let me start the questions to them. Also, whilst they're talking, if you have any questions that are coming up, please post them in the Q&A box here. And what we want to do is we want to take about 40-45 minutes and sort of have the experts answer some of the questions that we've curated. And then the last 10-15 minutes for your specific questions, to the extent that we can take them in this webinar. And if there are some left over, we'll definitely, all of us together will contact you. So don't worry, none of your questions will go unanswered. So without further ado, let me first introduce Akash Puri. Akash, you're a very known name in these webinars, but let me introduce you again. Akash is a director at India Sotheby's International Realty, and he leads the company's international businesses. He specializes in finding the right price property investments across global gateway cities. He's very good at it, ladies and gentlemen. I've had the pleasure of working with him consistently and for a long period of time. Neil Payne. Neil is the managing partner of the St. Kitts and Nevis Sotheby's International Realty since 2021. And he also has 20 plus years of experience across sectors and is here to share with us and guide us through the Citizenship by Investment program in this particular country. Very, very interesting. So Neil, lots of questions coming your way in the next 40 minutes. We also have with us Kitty Chandy. Chandy is a partner, a very senior partner, and the India Private Tax Co-Leader at EVA India. He's got 25 plus years of experience specializing in both private business and corporate tax and regulatory issues. So these are the three gentlemen leading our panel. My name is Sotheby. I'm also a tax partner with EY. I have the privilege today, and it's a wonderful to be moderator, because I have the right to ask all the difficult questions, the more the merrier, and put these three gentlemen on the spot. So to start with, Chandy, the first question to you, because our topic really is ODI and OPI. So a very general topic to start with. What is the broad framework of these revised ODI and OPI guidelines? And a lot of people are asking us, what is the difference now between ODI and OPI? Because that's a new term. So would you like to take us through the revised framework, please?
So thank you, Sotheby, and good afternoon, good evening, good morning to everybody. The ODI guidelines have been in place for 15 odd years, the erstwhile ODI guidelines. OPI is a new concept. ODI referred to investments in wholly owned subsidiaries, joint ventures, etc. For individuals to really make investments, there was the whole LRS route. And then over the years, it has got, there was some ODI that individuals could do, so on and so forth. But it has been 14-15 years since the regulations came out, and there was a bit of confusion, probably lacuna in what the regulators intended and what was happening on the ground. With that in mind, the government and the RBI both have issued directions, have come out with ODI and OPI, and they have defined what is OPI and ODI, therefore taken away a little bit of the grayness on overseas investments. So what is ODI and what is OPI. ODI is any investment, be that by an individual or an Indian resident entity in unlisted companies overseas or in unlisted securities overseas. It also includes subscription to the memorandum article, so on and so forth. And it includes, it defines ODI to be investment in listed entities where the stake held is more than 10%, or if less than 10%, you have control. So ODI also includes investment in unlisted without a need for that investment to be in joint ventures or wholly owned subsidiaries. It also then requires a lot of reporting. So previously, all the unlisted investments were made under the LRS route. Now they have been captured as an ODI route. What is OPI? OPI, and this is broad, there are some nuances to this on obtaining shares under ESOP, under an amalgamation, inheritance, so on and so forth. OPI is everything that is other than ODI. So everything other than ODI, but not in overseas unlisted debt. So you can't invest in unlisted debt instruments. So that is what OPI is. Investments other than ODI. So ODI is in unlisted. Now one can't do unlisted under the OPI. It has to be ODI. If you want to do listed, and because listed above 10% is ODI, listed below 10% becomes OPI. Then you have the LRS route, under which one can make investments to acquire real estate, etc. So LRS regulations had a particular rule which facilitated investment in real estate. That rule has been deleted from LRS and introduced into these regulations. So this is broadly the ODI and the OPI framework, Sotheby.
Stanley, thank you for this. I'm going to come back to you because a lot of people are going to now want to know, so how do they buy real estate overseas and where does that fit in? So I'm going to come back to you in a few minutes on that one. But thank you for the framework. Akash, I'm sure you're getting a lot of questions also from your potential buyers that are we allowed to now buy property overseas, etc. And that I'm going to, let Chandy answer. But what is the trend that you're seeing in terms of investment, especially, property overseas in gateway cities? What has changed in the last, we had COVID, sort of we've learned to live with COVID. We had a phase when nothing was happening, then a great phase. So what is the trend now? And what is the trend that you see for the future?
Thank you, Sotheby. I just wanted to put things into perspective. The outward remittances have actually, through the LRS, have hit an all-time high in FY22 to the tune of $90.6 billion, which is up 54.5% over last year, over the year previous to that, right? Now, where does this money go? This money goes into travel, this money goes into education, this money goes into real estate, right? Now, just to give you an idea of how things are shaping up overseas and where people are investing, Dubai has suddenly turned out to be a hot favorite, right? And more so from September onwards, because you can get a golden visa there. If you invest 2 million AED in a property in Dubai, your family can live, work, travel freely in the UAE for 10 years. So this gives a big advantage to people. I mean, and just to give you a small anecdote to support what I'm saying, in the week ending September 2nd, Dubai recorded $2 billion of real estate transactions.
Wow.
The tune of almost 2,600 transactions in that week itself. And the easiest example, and the most known to all of us, is that Mukesh Ambani just bought the most expensive villa at Palm Jumeirah at about $80 million, right? So this gives some sort of perspective of Dubai. Now I'm going to talk about some other markets so that, we cover the length and breadth of it. If we look at London, the average property prices in the UK are close to about 275,000 pounds. When you look at London itself, we're looking at over 550,000 pounds. There has been an increase of 50,000 pounds in the prices of homes in the UK in the last 2 years, right? And adding to that, there's a shortfall of usually about 35% in the demand and supply, right? Now, just across the pond in New York, if you look at Manhattan, it has the rentals recently have gone through the roof. For the first time in the history of real estate in Manhattan, the average rental price is over $5,000, which means you earn as much as $60,000 a year just as rent for a one bedroom, a good size one bedroom. And the other top favorite, if you look at it, is the reason why people are investing because of citizenship by investment. Now, Neil is going to cover some of it through St. Kitts and Nevis, but Portugal is also a hot favorite when it comes to citizenship by investments. More so that the home prices in Portugal have gone up by 13% from a year earlier in the first quarter in comparison. Lisbon has had the most amount of sales with around 1,800 homes that have been sold. Almost half of 12,000 homes that are available in Portugal have already been sold, and there's a huge demand and supply shortfall, so much so that certain regions have now been removed from that you could invest through the residential, but you have to invest in commercial property to be able to get citizenship by investment there. So I think that gives a good perspective of what is happening. Just if I can just take one more minute, Miami is a top favorite, more so because of good rental yields. They're up to 7% net rental yields. Some options are giving. Our friends from Miami have joined this call from one SIR today. And this is because during the pandemic, Miami grabbed the attention of the financial world and the startup world, good tax incentives, sunny weather, and a lot of Wall Street bankers, fund managers relocated to Miami. Citi's list of new corporate residents include Blackstone, Starwood Capital, Goldman Sachs, Virtue, Elliott Management, to give an idea. And this has really skyrocketed the prices in Miami too.
I think very true, Akash, and we've had lots of clients and others talk about this, buy homes. And for everyone on this webinar, I started working with Akash a couple of years ago, and I've really, my eyes have really opened into citizenship by investment and a lot of other things, and the kind of property prices and the returns, I mean, that one can get. It's I think a lot more than what people can expect. So thank you for sharing those statistics with us, Akash. Neil, over to you, and thank you for being so patient. And sorry to have come to you third, but I just wanted to go in that flow. So Akash touched upon Portugal and the Citizenship by Investment program, and over the last couple of years, at least for India, we've seen a lot of interest in these programs. I think ever since COVID started, people were thinking about them earlier as well, but there's been a large amount of interest. There was Cyprus, Portugal, a lot of other programs, and but a little less is known about the St. Kitts and Nevis program. So could you throw some light on it? Common questions that people would have: how long does it take? What's the minimum investment? Visa free access? And is it popular with Indians? And have you seen Indians do it? I think the most important one.
Yeah, absolutely. Well, thank you for letting me join. I'm learning a lot, so I'm glad to go last. It's my pleasure to go last and listen to Akash and Chandy and learn a lot. I'll start off with the headline news that St. Kitts and Nevis Citizenship by Investment is absolutely popular among the Indian community. The official estimate in St. Kitts is that over 5% of the population in St. Kitts and Nevis has entered from India via citizenship by investment. And so it's a very substantial piece of our population. And anecdotally, we actually believe the number is higher. There's a significant presence throughout the community of families and professionals of Indian descent. And many of our friends and some of the largest developers and restaurateurs and entrepreneurs are originally from India. And so absolutely a popular program. We get lots of questions all the time from folks from India interested in citizenship by investment. And certainly we hosted the Caribbean Premier League cricket tournament, which has just left the island in this last go round. And that always creates some nice ties to India as well. I think the estimate was over 80% of the viewership came from India. So not necessarily related to citizenship by investment, but certainly does create ties between our countries, which is really fun. St. Kitts and Nevis, and there are some specific differences from some of the European CBI programs, primarily on speed and investment levels, or some of the advantages that we have. But St. Kitts established the Citizenship by Investment program in 1984, which makes us one of the longest running in the world and the longest running in the Caribbean region. And there are three, the hallmark to the program, as I've mentioned, is that the citizenship is effective immediately. And so there is no minimum stay. In fact, it's a fully virtual process. You don't even have to visit the island through the application process. There is you go through a standard sort of KYC, AML background check process, due diligence process that is similar to what you'll experience opening with any foreign investment. No real surprises there, and lawyers walk you through every step of the process here in St. Kitts. But that process is completed in as little as 60 to 90 days, and then your citizenship is immediately effective at that point. Covers you and your family and a relatively broad definition of eligible dependents. You can, including any older parents who might be financially supported by the applicants, and many others. So that's kind of the hallmark of the program. Of course, with any citizenship by investment, what you expect is mobility, and St. Kitts checks that box, certainly, with over 155 countries as of the last count, where we can get visa-free travel, the entire European Union, the UK, large parts of Asia, South America, etc. So substantial mobility advantages from that. And then perhaps our EY partners can tell us more, but the tax advantages from St. Kitts, I believe, are second to none, and we'll talk more about those in a minute. But as you look at citizenship by investment, there really are three pathways that St. Kitts has created in order to do it, and I'll go on these, Serbi, if you'll allow, and in a couple of minutes, or whenever we come back to me, I'll go on these in more detail, but. Certainly, we hope everyone will come buy real estate and join us physically in St. Kitts and Nevis, and there are several ways to do that. There have also been development share programs created where you can be an economic investor in a development and receive a yield through a structured program. And then the government has programs whereby you can make donations or investments or grants of a form. And those start as little as $150,000 US. So lots of different pathways. St. Kitts really has, going back to the prior point, having started in the 1980s and having one of the longest running programs, the stability in the program is a hallmark that many investors find great comfort in. Others throughout the region introduced significant changes and have started and stopped, and St. Kitts has maintained a steady hand at the wheel, so to speak, since 1984. So, love the opportunity to be here. Thanks for the chance to talk about this.
Sotheby, you're on mute.
Sorry about that. Can you hear me?
Yes.
Okay, I said, so thank you. And you said the minimum investment is as little as $150,000. But I'm going to come back to you with a little bit more detail because you talked about three different pathways. But you should not have taken the reference to cricket. We're a bit sensitive about cricket. We've had 2 losses. So I'm definitely very sensitive about cricket at the point. So we're not going to talk about cricket for the next 40 minutes. Okay. Is that a deal? All right. Okay.
Works
super.
for me.
Yeah. So Akash, back to you. You spoke about Miami. You spoke about Manhattan, UK. I know you love UK. So you had to bring in the UK. And, so UK, very popular with the Indians. But very straight question to you. I'm an Indian. I'm looking for investment property, and I'm looking for investment or maybe for personal use, or maybe I have children who are studying overseas. What options do you suggest? Maybe top 3 or 4 that, I should consider.
Okay, so that's an interesting question, and I'm actually going to break it down in 2 parts because everyone's motivation to, consider something really depends on the life cycle, the purchase power, the remittability of the funds, and what they're looking for. So let's look at the softer fields, and this is more relevant to from what has happened in Corona. After that, now buying a property is overseas is not a wishful thing anymore, but it's a necessity. It is a tool to enhance the wealth portfolio. The buying of a second home is now considered and advised by a lot of financial advisors as a prudent investment decision. Now, what does it entail? And from the softer aspects, am I getting freedom of movement, right? Is there good medical facilities? Now, for example, in UAE, 43% of the population is Indian. And a lot of people have shifted there, just during the Corona period because they handle the pandemic extremely well. Does the nation have good welfare benefits such as CBI programs based out of Portugal? Tax incentives like you have in St. Kitts and Nevis and the other Caribbean countries. Does it have good infrastructure? One could look at London for that, or one could even look at New York. Or is it a stable economy? Will I have lifestyle benefits? What is the education? What is the employment opportunities? What am I doing while I'm planning the child's future? So these are the softer elements, that are thought of. And, I've given examples of cities where one could look at if, one was thinking about that. Now, the other aspect of it, which is the more prudent and financial aspect, and where we come in also as good advisors in combination with you, am I diversifying my portfolio properly in terms of the asset class across regions, internationally as well as domestically? Am I taking advantage of the currency arbitrage? Is the rental higher than what I'm getting in India? Does the rental beat the inflation? Usually the rental beats inflation in international destinations. London, central London, you can get anywhere between 3 to 3.5% of rental yield. New York is similar. Dubai, rental yields are between 4 to 6% now in downtown, and depends on things like that. Now, am I looking at a developed market? Am I looking at an alpha stock where we're looking at where the property prices may go up? Or am I looking at stability? Am I looking at central? Am I looking at going somewhere outside? And if you combine everything, you can get close to double-digit returns in most international destinations because the rupee depreciates on a yearly basis. Let's say 3 to 4% to global currencies. There's a capital appreciation of 4 to 5% if you buy in central, and you have a good rental yield between 3 to 4%. So you're looking at 10 to 12% returns internationally over that, right? And for example, New York is a great example. You're getting $60,000 as rental on a 1 million asset at this moment, and that's why we have this great photograph, and we're actually marketing the penthouse in this building. So lots of options are available, and we're fully equipped to handle our clients for that.
Thank you so much, Akash. That was very candid. Chandy, back to you. So Akash spoke a lot about why it's almost essential to get a second asset or to buy real estate and what the factors are. But I think before and when you take the decision to buy, and that's when these ODI, OPI, LRS guidelines come back again. So just specific to real estate, has anything changed with regards to an individual for buying of real estate overseas? And the second question that a lot of people ask, any guidelines or any changes on the process of taking mortgage overseas for buying of real estate? So two parts to that question, Chandy.
Yeah. So there are, and because Akash brought up the issue of purchasing a large house overseas in Dubai, I'll just touch upon the two routes. So there is a route to buy real estate via an operating company. So you undertake ODI investment. That ODI entity has an overseas subsidiary. You are permitted to purchase flats, real estate, etc., for utilization in the business and for your staff. Now, ODI can be taken out at 4 times of the net worth, and therefore the large amounts that one can utilize through a subsidiary entity where employees, staff can use the house. The house is although the name of the entity. The second is what we are more commonly used to, which is the LRS route. Now, the LRS route, there have been no changes. If anything, there have been slight improvements. So there is this $250,000 limit remains. So $250,000 is still the limit. One can buy a house utilizing that limit. One can club relatives in India to buy that house. That continues to be the same. There used to be a provision on leasing of house. Can I lease a house for X number of years? Now, that was not there in the regulations. That is now permitted. A lease up to 5 years you can undertake under the LRS scheme. The other one was, can I buy a property along with a relative who's non-resident? That was permitted under the old regulations, but it did not permit outflow from India. Now the rules permit outflow from India to purchase a house along with a relative outside. So one can use your $250,000 from here, and a relative outside can top up the balance, as an example. So these are the ways in which one can utilize to purchase a house. Now, mortgage, etc., the rules are still slightly unclear. In a foreign company, one can mortgage overseas assets. You can do all of that. But for an individual to buy on a mortgage, the point comes back to, does the mortgage value exceed $250,000? And therefore, are there going to be challenges? So in a company, it's all fine. Now, what's happening here is, as you can imagine, there are a lot of questions that authorized dealers, being bankers, are putting together, or rather have put together and discussed with the RBI, and we are expecting FAQs, and you will see a lot of that come out. The last point which is relevant is really LRS reinvestment. So previously the rule was that if you send money out as LRS, and you sell the assets that you bought under LRS, you could retain the whole amount outside India without the need to repatriate. Now the rule is, unless you reinvest that money, you need to get the money back into India. So that's a small restriction. So we must think of reinvestment or getting the money back within 180 days. There is also the rule that facilitates purchase. So one could potentially have owned securities overseas under the OPI route, or can own under the OPI route. The profit on that can be utilized to purchase real estate now. So these are the ways in which one can purchase the real estate asset overseas. The thing to note is the limits have not really changed. A lot of it has got clarified. Overseas, what is real estate business for corporates wanting to go out has been clarified. And it's really only buying and selling of real estate, where you trade in real estate, that is restricted, but every other activity is now permitted. So all in all, I think if anything, it has clarified a lot of points around the purchase of real estate outside by individuals and by corporates.
Thank you so much, Andy. I think that's, thank you for that answer. I think that throws a lot of light on the kind of questions that we are also getting, and I can see here as well. And I think that's also very, very useful for individuals who through the ODI rule or individually want to purchase real estate, because there was a lot of flux around what is leasing, whether it can be allowed, or whether the LRS still allows us to buy real estate. So thank you for clarifying that. Thank you. Neil, I'm going to come back to you because, we are on tax. So let's, so coming back to that little bit on tax. So you had spoken a little bit about the tax advantages in St. Kitts and Nevis, and you said we are second to none. Would you like to talk? I mean, I can see all the zeros there, which is for once the zeros look good. When you say no tax, no inheritance tax, no capital gains. So want to throw some more light on this. And also, very importantly, when a lot of these zeros and no tax get highlighted, then governments sort of are under pressure to put a 1 or a 10 in front of the 0. So is that going to happen, or is there any change expected?
No, I think that's such a great question, and it's fun to talk tax in front of the professionals. I'm not a tax expert, so I need to put all those caveats in, and perhaps I'll leave the second to none to you, and you guys can keep me honest at the end here. But yes, St. Kitts taxation comes primarily in two forms. Overwhelmingly, it's a VAT-driven economy, value-added tax-driven economy, based on purchases and imports. And activity while you are on island. And so most things that you pay for on island incur up to a 17% VAT tax, professional services, all down the line. And so that's where the country largely derives its revenue. Right. The other one the other source of tax revenue for them is a stamp tax on property transfer. And so there are several different scenarios, but that ranges from can be as low as 2% in some rare cases to as much as 12%, and that's typically split buyer and seller in various ways. So, so it's not that there is no tax in St. Kitts and Nevis. I could never imply that. The country certainly requires its revenue.
Right.
But from an international investment standpoint, it's an incredibly favorable tax environment. And so you do see the zeros across the board, which differentiate us. And that's both on domestic income as well as international income. And so very, very attractive in those ways. And I think it separates us throughout the Caribbean region and certainly from some of the European programs in how we do that. Looking at the picture as a whole, and I briefly referenced the pathways to investment, to touch on those a little bit more in detail, if you'll allow me, the pathways that have been created range, and Chandy, perhaps you can comment on how some of these fit into the regimes that you've been mentioning, but developers through the island have been allowed to create share programs wherein you're essentially a financial owner of a piece of a development. So we feature a picture there of one of them. That's actually a Park Hyatt property. And so in many cases, these are branded by some of the large flags in the world. That one that is pictured there is as I mentioned, the Park Hyatt. And those investments range as little as $200,000. And so what they'll offer you typically is some sort of return on your investment in the form. That one has between a 2 and a 5% annual yield. And the investment level is $220,000 in that case, but others structure them down to $200,000. And so if you want real estate ownership, and some of the programs come with free stays, et cetera, if you want real estate ownership without permanent residence, that's a great option for people who are looking for a headache-free way to own a piece of real estate. You can resell that asset between 5 and 7 years after you make the investment, and keep your citizenship in perpetuity. And so that's a key differentiator for the St. Kitts program. Again, citizenship is granted and eligible and effective immediately. And then you can hold and recapture for 5 to 7 years. Not quite the 180 days that I heard mentioned just a few moments ago to get back in, but capital is returned. Private home sales, most private home sales in the island are eligible for citizenship by investment. Those are relatively straightforward, and for the most part start at $400,000, the $400,000 level. And then there are programs where you can contribute to government programs, and they've just created a new one where there is a donation option eligible to the Sugar Fund, what's called the Sugar Fund, which invests in infrastructure of the country. And that is a great differentiator of St. Kitts and Nevis, is that the infrastructure on the island is absolutely first rate. You won't find better in the Caribbean. I challenge you on that one. And then there's a new option where the government is introducing specific projects and programs for the island, including some affordable housing, and we're actually doing a correctional facility where you are able to invest and contribute to those government projects. So those go down as little as $150,000. And when you do the government programs, the application fees on top are actually lighter as well. So 3 separate pathways that we craft for our clients based on what the objectives are. All of those make you eligible for the tax regime that you see on this slide. So all of those get the zeros, the good kind of zeros.
So I'm sure a lot of people are happy seeing the zeros. So good. Thank you for clarifying, Neil. Okay, Akash, we spoke a lot about why it's important to buy another, why it's necessary to have a second home and what are the advantages. But there has to be a flip side of the coin. And I'm going to ask you that very honestly, otherwise we wouldn't be giving a true picture to all our, viewers here. So I'm sure people have a lot of challenges in buying property. And I also know from personal experience that Sotheby's has come in and helped to overcome them. So that's my first question to you. And the second question, and again, I'm reading some of those questions as they're coming in as well, is how is the buying process different between an off-plan and a ready to move in property. So some of these are coming in as I'm asking you these questions, but I thought I'll club them in. So 2 questions there for you, Akash.
Thank you, Surbhi. Don't you just love this pick?
Absolutely. So next roundtable there, not a webinar.
Next
Okay.
Actually, you see some of these tall buildings which are off-plan developments that some of our clients have bought into. The advantage of an off-plan over a secondary market is basically the use of your LRS limits. As Andy had said, that we can only transfer $250,000 per individual. So a family of 4 can transfer only 1 million. Now, usually in any central location, be it London or New York, you need $1 million or £1 million to have a decent central 1-bedroom apartment. So that is basically the first challenge. How do you plan, and are the funds ready? If they're not, do I take a development that is completing in 3 years? Do I take a development that's completing in 18 months? And how do I transfer these funds? So the timing of the completion of your contracts for the property that you're buying is crucial. A lot of clients have been keeping money overseas. And when they do that through the LRS, they've been collecting funds, then they can look at secondary market options. And then you see the scope increases, because then you can choose, you can be more particular about the destination where you want to buy the location. The other challenge is to be able to understand, am I buying this for CBI, citizenship? Am I buying this for self-use? Am I buying things for rental? A lot of times, we're confused what we want to do. So the clarity for that is very important. The knowledge of the city where one is buying is important. And simple aspects such as, if I were to buy a 1 million property in London, my stamp duty is 9.4%. And why is that? So if I were a UK resident and I was buying my first home, my stamp duty would only be 4.8%. But if you're not a UK resident, you add another 3%. Then you add another 3% if it's your second home anywhere part of the world. So this knowledge element is important. Whereas in US, a $1 million home only has a mansion tax of 1%. And Dubai has 4% flat, no matter what you buy. Right. So these are important considerations, because despite your purchase, you have other additional costs that go to it, maybe a solicitor fee. The other thing to look at is the service charges. Service charges are relatively lower in London. I'm comparing London and New York because I'm trying to be as close as possible to apples and apples, right? Service charges are considerably lower in London per square foot. So they could vary anywhere between £3 to £7 per square foot per year, right? Whereas average service charges in the US, I mean, you're looking at anywhere between $1,500 and above for a studio on a monthly basis. So your stamp duty may not be there, but the service charges are higher, right? Then currency and your timing of it. The pound has actually fallen from over 100 to 90 in the last few months, which is a great time to invest and collect your funds over. So it makes it more attractive. Whereas US has gone up by almost 7 to 8% in the last 4 to 5 months. So that's another challenge, and to understand that better, and, to figure out what is the developer background. Do I go for what type of payment plan do I choose? And we always advise our clients to go for back-ended payment plans. So you invest 10 to 20%, up to 25 till the time of completion. And once the property is ready for handover, you do that. Dubai does this really well. Dubai has something called a post-handover payment plan, in which you invest up to about 30 to 40% upfront till the time you get possession. And the balance is spread over the next 3 years. So you could live in it, you could rent it, can actually help towards your monthly payment that goes in, towards the developer or your post handover. This is a smart way to do it. There's no mortgage, right? But it's a smart way to work around it, because domestic residents can't take mortgage overseas, right? Now, with more than 1,000 offices, 25,000 sale associates, present in 81 countries, and having done sales over $204 billion last year. We're very well equipped, in combination with consultancy firms such as yourself, Ernst & Young, we work very closely with, to advise our clients on the tax, the remittance, the other complications that go along with it. We advise on which solicitor to take, because it's very important to have a good solicitor to represent you towards the developer or the vendor from where you're purchasing, because you're not physically present there. Usually, else is doing this work for you, and there can't be any slips. So everything is very well detailed, and we come across as a one-stop shop, which may not be available with a single developer, because he may, because they don't have those capabilities. So using our brand's access to information and collective strengths, we give you a wide range of options, such as shortlisting options for you, organizing the viewings, be it virtual or physical. A lot of our clients during the pandemic time, when one couldn't travel, have bought just on virtually looking at what is available. And we work very closely with developers who actually assist us with that. And when they got the chance to visit those developers, we got great messages from them. And that is very important. Are you being sold what you're being shown? Because we have access to certain information that through the CGIs, they can tell you exactly what is the view from your bedroom window or from your drawing room window. And it's going to be similar to what you've seen on the computer screen, when you bought it. Then we negotiate the price for you, be it rental or the asking price, try to get you the best discounts, the best value, suggest obviously like I mentioned, the solicitors, tax consultants, accountants, anyone who could help to strengthen the transaction and make sure that we oversee a successful transaction from the start to the completion of the contracts. And here we're so well equipped, as you see here today itself, we've got participants from India Sotheby's, we've got participants from St. Kitts and Nevis Sotheby's, we've got in the audience, we've got Miami Sotheby's, One SIR, we also have you. And this just goes to show the relationship that we have and the ability to be able to transact and successfully conclude anything that comes through.
Very well spoken, Akash. And some of I think the lessons that I hope everyone is taking with them, or at least I am, or some of the important things are planning is very important. Your purpose is very important. The LRS guidelines with respect to keeping money overseas, if you're not using it, reinvesting it for LRS purposes is very important to note now, because you can't just send money and keep it there. So you have to plan in advance and use the limits as per law or the limits for the family. And therefore, starting a conversation, if it's in your mind, starting the conversation at the right time, taking into account all the facets you spoke about is very important, because you may not, even if you found the right asset and you just love it, but if you haven't planned the whole transfer of funds or the whole thing, you may just end up losing your dream home or your dream investment. So I think planning is key and the purpose is key. So thank you for reiterating that. Chandy, I have a slightly different question for you, and it's come up in the audience, I think, related to both real estate and maybe the whole framework as well. So somebody asked this in the chat box to me one-on-one, talking about round tripping. So just for everyone's reference, before I ask Chandy this question, round tripping as a concept is a practice where funds are transferred from one country to another and then transferred back to the country of origin. So initially it was sort of looked at as a taboo subject, because people thought it was being done for practices such as black money or to get beneficial tax concessions. Round tripping has really has been talked about in the new ODI OPI framework. And so the question that I have from the audience for you, Chandy, is what are the new norms with regard to round tripping? So would you like to throw some light on that, please?
Sure, Sotheby. So the round tripping concept, just a second on the genesis of this problem was when we had the Mauritius Treaty and there was no tax. So Indians sent money out and that reinvested into India. We didn't pay tax. From 2004, this has gone back and forth. It was in guidance, not in regulation. In last couple of years, there was a direction in the regulations that if you do ODI, you can't do FDI. That same entity or that same structure can't. And those who have it need to get approval. So everything was approval. Round trip, as you can imagine, from India, go overseas and come back to India. There was also leeway for individuals, because individuals, when they went under the LRS, they really didn't have much control on what happened later. That was left open and round tripping was not queried. Now the government has come out and clarified on what they think is round tripping. So round tripping, they have broken up into round tripping when ODI is undertaken and round tripping when non-ODI OPI is undertaken. In round tripping also there is, so if you have control, if you make an ODI investment and if you have control, then you can't have more than 2 layers of subsidiaries when you come to India. So theoretically, you can send money outside into an overseas entity. That entity can have as many foreign subsidiaries as they want. But if you want to come into India, you can't have in the chain, one below the other, more than 2 entities. So this is the limit. For individuals, it's a little more vexed in that you can't go into an entity that is in financial services, that is not operating. If you have control, you can't even have one subsidiary. So again, some guidelines are expected because the rules are much more stringent for individuals, even where individuals have no control. But this is all for the corporate structure. In a scheme of real estate purchase, this really does not, come about because that is under separate guidance, the LRS.
Thank you so much, Chandy. So I think everybody who had this question, you can just, maybe reach out separately.
Yeah, and the point here is these are very, very fact specific round tripping. So, while I can, and I've spoken at a 30,000 feet level, but one needs to get into exact specifics on each structure to evaluate whether there's round tripping or not. And then you have the larger challenge where the government has said that, investments that have happened so far under the erstwhile regulations are deemed to have been made under the current regulations. That is the language for grandfathering. Now, they've also left a line there that it should have been permitted under the old regulations. So this will throw a lot of people into a review mode where one has to look at the structure they have to evaluate whether it was 100% compliant, and only then there is grandfathering, so on and so forth. Now, why do I say this and why is it important? Because if there's going to be liquidity in the system at some point, the authorized dealer will check all of this. And therefore, one needs to undertake that check before a liquidity event and get things sorted. So, sorry, Sotheby, over to you.
No, thank you so much, Chandy. I think a lot of people who are also looking to buy real estate would have done it through structures or want to do it through structures. So I think that's the question of round tripping coming up, and a very important, fact specific exercise, like you said. Neil, I've got a lot of more audience questions. So last question to you before I get to that deeply increasing Q&A box. We've heard a lot about the Caribbean countries, not just cricket. Sorry, I brought up cricket this time, but also they've been the citizenship by investment programs, especially those linked to the US and the Caribbean countries, have been quite popular. So what differentiates the St. Kitts program with the other Caribbean programs?
Yeah. Well, I think it's such a great question, and it's what country do you want to domicile in and associate yourself with? And from a citizenship by investment standpoint, St. Kitts is very careful to maintain best of breed, and is often called the platinum standard. We'd be happy to share with anybody who wants some of the CBI indexes that compare all of the programs throughout the region. And we're happy to do that because St. Kitts almost always pops out on top. And certainly it is amongst the fastest. As of last count, it had the highest number of visa-free countries that participants could visit in the Caribbean at 155. I saw one in the chat box, if I didn't mention it, that does include the European Schengen region. And so the program itself is extremely well run, and the government has designed these schemes over a very long time to be stable in such a way that has really facilitated a lot of growth, and certainly the real estate market around the world has accelerated post-COVID in ways that none of us could have expected. That is also true in citizenship by investment, real estate investments in St. Kitts and Nevis. We've seen 30% year-over-year increases the last few years. And so the program itself is a big differentiator. But more importantly than that, I think the island and the nation set it apart also. St. Kitts has been an economic hub for the Eastern Caribbean region for quite some time. It's actually where the Eastern Caribbean Central Bank is seated, and the currency denomination is the Eastern Caribbean dollar, which important to a point that I forgot whether it was you, Surabhi, or Akash or Chandy was making a point of currency arbitrage, that the EC dollar is permanently pegged to the US dollar, which is an important asset from a financial lens standpoint. And the infrastructure on island supports that. Interestingly, St. Kitts was one of the last countries in the Caribbean to adopt a focus on tourism as an economic driver. And so as a result, the rest of the economy is actually quite diversified in ways that you don't find in other islands. And so that creates some unique opportunities as well, and has really helped with the infrastructure. I mentioned earlier the sugar fund that folks can donate to as part of the citizenship process. And the proceeds from that fund, starting in 1984, have funded some absolutely incredible infrastructure on the island. And so you end up with developers. This picture on the left is a rendering of a development that's going in on St. Kitts, will be a branded development, eligible for citizenship by investment. But developers are increasingly taking advantage of a phenomenal foundation of infrastructure. And so the island itself really stands above the others in the region in a lot of ways. Great direct flight access. You can fly a large jet in there. We're not landing on a seaplane, so to speak. You can get the big planes direct from London and Miami and throughout the U.S. All over the place. So we love the island and we love the people. I think anybody who, and we hope you will all take the chance to come visit us in St. Kitts, but the culture and the people in St. Kitts is extremely inviting. And regardless of how you got your citizenship, you are welcomed into the community, which is a big deal.
Thank you so much, Neil. I think that picture speaks volumes. It's very difficult for me to ask all the questions now. And, I'd rather just see that picture and plan my next flight. But we've got to go back to business. So and we've got about 5 minutes. And whilst I tried to ask a lot of the questions whilst we were going through the webinar, but there's still a couple that are that I'll just take up right now in the next 5 minutes. I think the first one, can I use LRS to invest in a EB5 property for an EB5 visa?
I think the rules have not changed.
Right.
So LRS up to 250,000 is still permitted. So one can still do that. And if they're family members, you can club it and so on.
Perfect.
Surabhi, it's not the EB5 property. It is an EB5 is a plan to invest in a business and not in property. So this is a common.
Yeah. So one will, in an EB5, and if it's the US EB5, as Akash alluded to, one will have to set up a company there. You can infuse, you can go there. So you can use limits above, because EB5 is now more than 1 million, right, Akash? So we may need
900,000 at the moment.
900,000.
In the more urban areas.
Yep. Sorry, Sotheby. Over to you.
Sorry, one more. So, okay, I'm just trying to see how, which questions are repeated so that I can take them up. Stanley, one more to you. Does St. Kitts have a tax treaty with India?
Actually, I don't know that answer offhand. We'll have to check. I'll have to check that. I don't know if Neil has that answer.
I know the answer to be yes. It was signed in 2014. I would not be brave enough to venture anything about the details of the treaty itself. So I know that it does exist, but that's the extent of my knowledge. So.
Okay.
Is it an economic?
Yeah.
Okay.
Economic. Sorry. Yeah. I think there is there's an economic exchange treaty. I think the one you were alluding to, Neil and Chandy. Okay. Which CBI programs offer visa-free Schengen travel? So there's Portugal, but Neil, Ashwin, Amit, Akash, Samir, if you want to add.
So I'll just take that up. Portugal, Spain, Malta, Cyprus, Greece, the Caribbean countries, all of them have this.
Absolutely. And for whoever answered this, I think Sanjay, you've asked this question. All of us together would be happy to get on a call with you to explain, because each of these programs are very different in terms of how much you need to stay in each of the countries, whether it's a PR and then a visa, a PR and then the passport, how much you can invest, what are the different pathways, as Neil was saying. So all of these programs are different. So it's good to do a comparison depending on, as Akash said, your purpose and how much you want to do, whether it's for investment or whatever is your purpose. So that's really the brief answer. And I'm sorry I'm rushing through this because I know we have only about 2 minutes to go. Ranj, you're asking, I have not heard anybody mention the 5% TDS. It's actually TCS for sending money overseas. This still exists? Chandy, to you, it does. But Chandy, if you want to give any...
Yes, it does. No, it does. It's more government's way of monitoring those who have money. They have figured out from their analysis that people are traveling or going on packages or buying, not paying, are not filing tax returns. So this is a way to get them into that.
Yeah. And it's TCS, like I said, not TDS. So you can take a credit when you file your tax return. So one more question. And I think Chandy, you had answered that question, but it's still come up. The LRS is 250K USD equivalent per person, per family member. Is that still the case? So if you're married and have 2 minor children, you can send 1 million USD.
Yes, those limits remain. That has not been touched.
Okay, super. Okay, somebody wants us to brief them how to invest in American equity and bond markets. Akash and others would love to answer questions around investing in real estate, but I think we can take this separately. It's not, if you want to talk about where to invest, I think that's best answered by a wealth manager. But if you want to know structures and whether, how you want to invest as an individual or a company because of the regulations, maybe, you can connect with us through Sotheby separately because it's a very fact-specific question. Another one question, is there any regulation to bring back the capital into India after having sold a real estate investment originally bought under LRS? Chandy, you had answered this question while we were going through it, but if you just want to throw some more light on this one.
So this question, the regulations today say if you do ODI, OPI, or even LRS, and that's where it is slightly nebulous. One has to get the money back within 180 days if it is not reinvested. Now, these regulations came up in August 22nd. So if one had LRS balance in the account, the question is, can it now be, and everything is grandfathered, can August 22nd be taken as day one? And all the money is lying in the account, can it be invested in, in any security for the time being? Is that reinvestment sufficient enough? And if that answer is yes, then every other answer, on LRS to buy property, etc. If you sell a property, one has to reinvest within 180 days, else get the money back to India. Now, this is an issue that's being, where clarification has been sought.
Thank you so much, Chandy. We're on the top of the hour. I still have a few questions that unfortunately we can't take at the moment, but if you can write to maybe to Ria directly, and then one of us or all of us together would be happy to answer them. And with that, thank you all for listening very patiently. An hour of your time on a Thursday evening is very valuable. Please reach out to us for any questions. We're all happy to help. And as Akash said, we're one team. So you have all your answers under one umbrella, one roof. And so happy investing, happy traveling to St. Kitts, and have a great evening. Thank you all.
Thank you.
Thank you very much, everyone.
Thank you.
It's a great moderator, Sotheby. Thank you.
Thank you.